first of all, I want to start by just thanking SOCAP and Sorensen for another terrific convening, but also for making Catalytic Capital such an important part of these discussions over the next few days. And they have historically supported that, and we're just incredibly grateful for that. So as Mark mentioned, I'm John Ballback. I'm the director in impact investments at the MacArthur Foundation. And I want to just welcome you all to this panel on catalytic capital in practice. And I also want to say it is just so nice to be in community with all of you. I've found, I don't know about all of you, but I've found over the last year especially that it's been energizing, and it always makes me more hopeful to be in person with leaders like the folks on this stage, but with all of you as well. And I think especially now, it's just really great to be in person. So thank you all for being here today. So as I mentioned, we're excited to be here with, or I'm excited to be here with folks who are partners of the MacArthur Foundation. And as Mark mentioned, each of the folks here have been supported with the Catalytic Capital Consortium, or what we call the C3 initiative. And this was an initiative that was launched in 2019 by the MacArthur Foundation in partnership with the Rockefeller Foundation and the Omidyar Network. And it was an initiative that attempted to increase the knowledge, awareness, and use of catalytic capital. Through that initiative, we made $128 million in commitments to investments that we hoped would be, and we believe are, powerful examples of catalytic capital. And each of the three folks represented here are part of that portfolio that we've supported. We've also, through, in partnership with Rockefeller and Omidyar, we developed a funder collaborative that was working to build the field around catalytic capital, and that included efforts to build the evidence base for catalytic capital, to advance the practice of catalytic capital, foster solutions and infrastructure, and ultimately just try to build awareness around the use of this important tool. We were really excited at SOCAP last year to announce the next phase of this work. And we invited, and we're really happy to welcome 11 new funding partners into that initiative. And I just want to call out in particular the leadership of my colleague Urmi Sengupta, who literally just walked in. And so Urmi, if you could raise your hand. Urmi has been the driving force behind that funder collaborative, and we're incredibly excited about the work ahead with that effort. So maybe what I'll do next is one other thing to note actually is related to the investments that we've made to support this initiative. We're planning to release an impact report, or what we in the field, as I know you all know, call an impact measurement and management report. And so we expect to release that later this year. And we're also planning to release a perspectives piece, a blog piece that shares the MacArthur's thinking on IMM as a companion piece to that effort. So more to come on that. And I also want to call out my colleague Charles Kuston, who's sitting here, who, if you could raise your hand, Charles, who developed our thinking and our principles and practice around impact measurement and management. And you can learn more about the great work of these three funds, but also other funds and investees in the MacArthur portfolio. So with that, I want to move to introducing the panelists that are here today. What I'm not going to do, each of these three are incredibly accomplished individuals. I'm not going to go through their full bios. There's a lot there. But instead, I'll just introduce them, and then we'll give them an opportunity to share a little more about themselves and their organizations and funds. So starting to my immediate right is Keisha Cash, who's a general partner with Impact America Fund. Next to Keisha is Dr. Johanna Wolfson, who's a general partner at Azola Ventures. And then at the end is Santiago Alvarez, who's co-founder and managing partner with Alive Ventures. And so maybe just going right down the list here, or right down the row, if you could just, Keisha, start by introducing yourself. Tell us a little bit about yourself, your organization, the impact and investment thesis for your funds, and then how Catalytic Capital plays a role with your efforts.
I'm happy to be here. Thank you all for joining us. We heard this is the last session, so we're like, these people are really interested in the conversation, which is great. I'm Keisha Cash, General Partner of Impact America Fund. A little bit about myself. I know we don't have a lot of time here, but I was born in South Carolina, raised in Orange County, California. And my mother had the benefit of having access to welfare, Section 8, food stamps to supplement her income, and to place us, my sister and I, in a neighborhood through that Section 8 voucher that allowed us and afforded us the opportunity to attend a fantastic public school. And I went on to become the first generation college student. And I usually don't get choked up when I tell this story, but for such a time as this, I think it's important for us to understand how a low-income family leverages and uses the Medicaid system, the welfare system, the Section 8 system. I know some of you all are in affordable housing, so thank you for your work. And I went on to become a first-generation college student at UC Berkeley, followed by an internship on Wall Street, working in finance and banking. Made my way to Columbia Business School after some time off working on Main Street. That's another story if you want to hear it. And had the opportunity to work in London at Bridges Ventures, and then meet a Mr. Josh Millman, who is also a name, impact-wide name, and had the opportunity to work at a family office, and then that family office seeded my Impact America Fund 1. And then we thankfully were able to raise the Impact America Fund 2 thanks to the Catalytic Capital of the MacArthur Foundation. And about a year and a half, 2 years ago, we raised our Impact America Fund 3.
Johanna, so Johanna, same question to you. Do you want to just share a little more about your efforts?
Sure, thank you. I don't think this one's working either. It is. It is. Okay, great. Well, great to be here. This is actually my first SOCAP, so that's less than 15, but so happy to be here. I am a co-founder and general partner at Azola Ventures. We're going after big climate impact. We're a spin-out of Prime Coalition, which is a nonprofit in the space that has shared the stage here at SOCAP before, and I'll describe more about that evolution of our model. We founded our fund because we believe that traditional venture capital, which is sort of the common financing instrument in climate and climate technology and solutions, is leaving really big impact on the table. That there's just a lot of chasing of quicker wins and less valuing of kind of fundamental drivers of impact, and that catalytic dollars could surface those fundamental breakthroughs that venture was leaving behind and bring them forward to be real opportunities in the market. And so that's what we've been working on proving out. We raised our first fund, a Prime Impact Fund, 7 years ago and started deploying that, including with fantastic support from the MacArthur Foundation and as part of C3. We deployed that capital and raised and then started our next fund, Azola Ventures, which is a larger vehicle that actually pairs catalytic capital with more conventional market capital. And I can describe more about how we do that. And catalytic capital is absolutely central to what we do. We mostly engage with co-investor peer funds that do not deploy catalytic capital. So I'll talk more about kind of how we interface with that world. But it is the thing that makes us unique and able to launch ventures that wouldn't otherwise get off the ground. And it is what allows us to show up differently for companies and on company boards as impact first investors. Thanks again for being here.
Thanks, Johanna. And Santiago, over to you.
Thank you, John. So my name is Santiago Alvarez. I'm the co-founder and managing partner of Alive Ventures. And first of all, thank you to MacArthur and Sorenson for the invitation to be here. It's a real pleasure. I'm based and born and raised out of Bogota, Colombia. Ally Ventures is an impact fund that is dedicated to support is dedicated sort of to bridge the inequality gap that we face across Latin America. I'm not sure how familiar you are with Latin America as a region, but is the place in the world where you get the wider gap in terms of inequality. There is a segment of the population that has access to terrific education, to opportunities, but then there is a vast majority of the population where they do not have access to this kind of opportunities. And what we realized at Ally Ventures about 8 years ago, with the support of Acumen as an organization that sponsored the creation of Alive initially, is that with the role that technology is playing right now, there was a big opportunity to be able to reach the segment of the population that was traditionally not served. In terms of access to education, access to healthcare, access to energy, access to financial services. And that's what we've set out to do over the last 8 years. As I mentioned, Acumen, the U.S. organization that probably you're familiar with in terms of that pioneer, the pioneer investment capital, they seeded sort of the formation at Alive, and then with the support with organizations such as MacArthur and other local partners such as Fundación Bancolombia that is here also in the room, we were able to get Alive started 8 years ago. We started as a very small initiative, and thankfully I can say that right now we've secured not only our first fund, but also a second fund that is 2x the size of our first fund. Thank you also sort of to the ongoing support of these catalytic partners, again, such as MacArthur and Fundación Bancolombia that is here in the room. I'm happy to share more about sort of the journey we've gone through these 8 years.
Amazing. So each of you referenced the fact that you've raised follow-on funds, and that's incredibly exciting to us. That's a big part of what Catalytic Capital is trying to do, is to support the subsequent deployment or mobilization of capital. So I wonder if you could talk a little bit about that process. So any learnings from the first fund that helped in the shaping and the development of the follow-on funds, and then maybe share a little bit how, if at all, that Catalytic Capital helped to play a role in those follow-on funds. And Johanna, maybe we could start with you in this case, since I know that Azola in particular, is, as the second fund to the Prime Impact Fund, you pursued a different structure, a really creative and I think thoughtful structure. And so maybe we can start with you to share a little bit about your journey.
Sure, happy to. So Prime Impact Fund, we built fully comprised of Catalytic Capital. It's a $50 million fund and to launch companies that wouldn't otherwise get off the ground, but that could have enormous climate impact. And at the time that we were raising that fund, starting in early 2018, whether or not we could do it was a pretty big question. We, at that time, Prime Coalition had syndicated some individual investments from philanthropists into companies through recoverable grants or PRI loans. But to our knowledge, at least in our space of climate, what hadn't been done was aggregate Catalytic Capital into a captive fund to be managed in the spirit of a GP managed structure. And so we went out and we had a spreadsheet amongst ourselves, Sarah Carney, Matthew Norton, and I, called getting to 20 million.xls. It was like, can we get to 20? And the fundraise itself was challenging, but we got there. We ended up with a 2x oversubscribed fund, a little more than that, at 50 million. So just its existence was a really important proof of concept that we could aggregate that amount of impact first, catalytic capital, primarily charitable capital, into an active fund to be managed in a blind pool. While then executing that fund, we also invented a lot of the structure. We figured out, okay, what's the structure that's going to work here? What's the governance structure? What are the legal agreements that we'll put together for donor advised fund participants and foundation grant making participants and so on? How do we fine tune our operations? How are we going to assess additionality and ensure that we're making investments that wouldn't otherwise happen? How do we set up impact gated carry for ourselves as managers? All these things we've learned a lot from the community, but we were also trying it out for ourselves for the first time. So again, it's the fund's existence and then all those operational strategies we learned. What we couldn't do, and this was the primary jump from Prime Impact Fund to Azola, what we weren't able to do with that structure was to continue investing in companies long term. Because once they graduated from additionality, at least in our formulation of how we deploy catalytic capital, I realize there are different ways to do it, but with our formulation, once a company kind of graduated across that boundary and became a competitive investment in the marketplace, we actually weren't going to deploy this impact first catalytic capital into that company. And so we then weren't able to stay at the table. We would roll off the company boards, which is fine in the evolution of the company, but if we want to be an impact first voice for as long as possible, in the room with the companies, we would prefer to preserve ownership, grow ownership, and be at the table. And so with Azola, we built on a much larger pool, kind of bolt on to the catalytic portion. So Azola is a $240 million fund where 1/3 of the capital, and it's its heart and soul, even though it's the minority, is catalytic capital. It's what leads our investment practice. It's what makes us different and allows us to make a different kind of set of investments. And then we pair that with what we call a full cycle fund. It's just more conventional impact aligned dollars that don't take on a tax benefit and wouldn't be appropriate for the use of charitable capital. And we then draw on that pool to follow on to our initial investments from the catalytic pool and really stay involved with the company long term, which is proving to be very helpful and effective, because even for a company that launches on an initially strong trajectory, there are going to be challenges along the way. There will be recaps on their cap table. There will be near-death experiences. All of these things will happen. And to have a long-term impact-first partner, many times who has been there since the beginning, is just incredibly valuable. So that's probably been the biggest change that we've made, and it's one that we'll be carrying forward into future funds as well.
Fantastic, thank you. Santiago or Keisha, do you want to jump in?
Sure, John. When we launched Alive, it was 2018. And we're seated here in San Francisco, if you think about sort of venture capital, then you have to go back like 60 years, sort of, to think about sort of the origins of the asset class. In 2018 in Colombia, venture capital was probably the origins of the venture capital as an asset class for the country. And so, when you talk about catalytic capital back then, for us, it was really sort of to get kind of an asset class within a specific thesis of impact out of the ground. And so we were there, a couple of partners with the support of a great organization, but trying sort of to approach investors to believe in a thesis that had zero traction. That is pretty tough when you're approaching sort of investors that they haven't had experience or knowledge, or they haven't not been exposed sort of even to the concept of investing in early stage companies. Less to say sort of companies sort of with an impact mandate embedded in the business model. So for us, it took us about 2 years to get off the ground, to raise our first fund. Our first fund was a $28 million fund. And the fundraising process was extremely, extremely challenging. Having said that, we feel extremely proud that we were successful sort of to get to where we, to those 28 millions, again, because of the support of organizations that they took a leap of faith initially. And they believed sort of there was an opportunity. They had not evidence to back that, but still they trusted in the team, in the conviction that also the region was ripe sort of to take that opportunity forward. You know, these days, 8 years later, our second fund is a $60 million fund. And what I think I feel more proud of is Alive has become not only in the largest impact investor, but it's actually the largest venture investor in the Andean region. That is, of course, because our asset class is very small and still there's so much room to do, but also I think it's a statement of the opportunity that we have right now to really deploy capital in ways sort of that are reaching underserved segments of the population, and that we can do it, you know, right in terms of impact and right also in terms of achieving attractive financial returns. And that has also led to the fact that our second fund, we've been able sort of to bring investors that are more traditional investors, that are, we feel also very proud, like now we have a third of our investor base that is local, which initially it was really sort of impossible sort of to think that. And with the expectation actually that it needs to be much larger. We need to unlock a lot other sources of capital sort of to be able to capture the opportunity that we see across the region.
I'll add on quickly. I think my colleagues here have said some wonderful things, and I want to follow up with both of you. We've just met. But we had a $10 million Fund 1, so you raised much more money than I raised in my first fund, a $55 million Fund 2, and a $112 million Fund 3. So we can pay ourselves now. I have 2 team members here that are on the team. We have other team members. I think the lessons learned from 1, 2, 3, I tell you, if you're a manager, emerging manager working on your first fund, raise more than $10 million because you can't pay yourself. You can't pay other people unless you're rich and it's a hobby. So lesson 1, raise enough money so that you can actually pay yourself and pay a team of people, because this work is very difficult. I raised that fund with, I like to say, $60,000 in cash that I borrowed from a friend that I've paid back since. $40,000 grant from the SOCAP Foundation, a foundation based in New York. And so I raised that fund with a little bit of network. I negotiated with Cooley to give me a layaway plan, as I like to say. So they didn't charge me everything up front for my fund formation. But I had a little bit of money, but one thing that I had that I'm very thankful for and I continue to have is a very rich network. And in this game, the social capital per this conference is extremely important. Lessons learned from Fund 2 to Fund 3. $10 million fund, don't raise one. It gave us a little bit of a track record, but not much. Fund 2, a $55 million fund, still sort of raising and building the plane while we're raising it, hiring team members, et cetera. From a catalytic standpoint, our structure and what we applied in conversation with MacArthur and our strategy and our pitch and our vision, and I hear the creativity of how do you convince someone to invest in you to try a thing out that you're trying to prove out. And so fund managers are often more creative than we get credit for. And the stories that we tell and the analysis that we do to validate those stories. And so in my conversation and the catalytic part of our Fund 2, we are investing in companies that scale impact for low and moderate income Americans. And we're generalists. Obviously, software technology makes up the bulk of our investments, but we have also done some services types investments. And the catalytic piece for us was, hey, at the time, there aren't many folks looking at low and moderate income communities in America and thinking about how to scale solutions that really are inclusive for them, that they benefit from, that leaves more value, that create economic agency, big lofty goals that we're going to continue to work on. And then the founders that we're meeting, we're oftentimes seeing, and one thing I did learn from Fund 1, and I think it held true for Fund 2, they need a little longer runway in between those priced sort of venture rounds. And so the other thing that we said we were going to do is we're going to create scalable impact models using a venture capital framework. I start to question that now, but that's a different conversation. That's like a completely different panel. But we're structured like a venture capital firm. We're a 10-year firm, all the bells and whistles of a venture capital firm. We're investing in companies that are scaling impact, and oftentimes it takes those companies, because you're trying to get both things right, financial returns, impact, all the things we all talk about, and it's taking them a little bit longer to get the value that others would get at a Series A round or a Series B round. What does it look like if we provide bridge capital, which bridge financing is now all the rage, but what if we provide that bridge capital to get them to the other side? So we tested that out in Fund 2, a lot of lessons learned, happy to have the bridge conversation. Some of them made it to the other side. We had a couple exits from bridge to exits, being very tactical about that. And then we had some, the company should have probably went out of business 5 years ago, right? And so a lot of lessons learned on that bridge capital piece that we've now ported over, I think, to our Fund 3, and we're smarter about the bridge, and so the nuances of the bridge, and what does the company actually need to get across the bridge? It's much more than capital. Oftentimes, it's not just capital, but what does the team need to look like? From an operations standpoint, how's the macro environment changing? So we've learned to be more rigorous in our bridge assessments for Fund 3. And we will continue to deploy that capital, but also getting comfortable. I think the lessons we learned from bridge investments have also made us smarter with even earlier investments. So those are some lessons learned. But I would like, and I know we'll continue this panel, for all of us, and I'm glad to be a part of this catalytic conversation. I think I was a bit more ambitious when I started Impact America Fund, that I was, I'm going to have all these billion-dollar unicorn companies in my portfolio, which we do have a couple of those. But the real work is getting that scalable impact piece right, and how do you grow a company sustainably to do that?
Thank you so much. So one of the things that we've been struck by with this portfolio that we've constructed is how groups from seemingly disparate impact areas have found common cause in some of the challenges that they've faced and encountered. And Keisha, you mentioned this work is hard, and we totally agree. And you already started to go down this road. But I wonder if you all would like to share maybe a challenge that you dealt with, how you dealt with it, whether that is unique to your specific impact thesis, or whether it's a more generalized challenge in the deployment of catalytic capital in the way that you all are deploying it. And happy to start with whoever would prefer to jump in first.
Okay, by process of elimination, that's me. Two things come to mind. One is in the vein of the work is hard. I sometimes tell fellow climate venture investors about our fund thesis, and they're like, so let me get this straight. You find companies that no one else will invest in, and then you invest in them and, work your butt off to try to make them look investable. And like, yep, that's what we do. And so, part of it is just that community that comes from, just understanding just intrinsically why each of us do what we do is because no one else is doing it. And so I draw a lot of inspiration from those parallels, from other fund managers and the entrepreneurs that they work with, because the story just does feel very similar, even if the realities of our subsectors are different. Because we invest in companies with catalytic, often philanthropic capital, those companies will get, or we want to avoid those companies being branded as, philanthropic causes in the marketplace, because they're going out and, raising from the market. Usually we're the only catalytic investor on the scene. Our job is to, mature them into market readiness as soon as possible. And that's another place where I've kind of drawn inspiration from other folks living in two worlds, essentially. And then the last thing that comes to mind where I've learned a lot from peer funds relates to a way that we help portfolio companies, specifically around community engagement. So climate tech has a real problem on this front in that there are a lot of climate technology companies going to market without a lot of thought about how do we deploy responsibly and how do we engage a community so we even know what responsible deployment might look like. And it's just not as much part of the culture of this kind of very tech-forward climate tech universe. And again, as I mentioned earlier, it is because we are bringing catalytic capital that allows us to show up with just totally owning the impact first aspect of what we do. And that is one example of it is, we prioritize that with companies. And I wouldn't know how to do that if I hadn't learned from a lot of peer investors that don't necessarily work in climate tech about how to help companies do community engagement. So I'm just, there are so many reasons that I'm grateful for a peer network of fund managers, but that one looms large for me.
I think from our perspective, an important lesson that we've learned along the way is the importance of being truthful to our strategy and our thesis. When going back sort of to the context of Latin America, there are many investors that they believe that just by the sake of investing in Latin America, they are doing impact investments. And that's fine. I'm not criticizing sort of that thesis. Each investor has its own approach and hypothesis. But that's not our thesis of impact investment, right? Our thesis of impact is that we only invest in businesses that they are reaching an underserved segment of the population by providing a good quality product or service, and that they are doing it in a scalable and profitable way. That's Alive's thesis. And again, sort of when we sort of set out to do Alive and to get going, going back sort of to your point, it was really tough, It was really tough. And if we go sort of to the years of the free money, the boom of the free capital, in Latin America, that created a massive bubble in the venture space. I'm telling you that it grew by 5x sort of the availability of capital to invest in venture in general. And so when you're a fund manager sort of getting started with the need sort of to prove your thesis that you're doing good work in terms of impact, but then in terms also of financial returns, it created some tension and some moments in which as a team we got together and said how do we ride sort of this wave. And ultimately, we decided sort of to stick to our thesis, Eventually, there was a discussion that we could sort of try to go the easy route, I would say, and that potentially could bring us more capital, could create, the expectation of enhanced returns. But then, 4 or 5 years, fast forward that point in time, the bubble kind of burst, and then you look back in terms of sort of and you see, and you compare the performance of our portfolio, then the performance of others, and then you double click in terms of what kind of investments we did, and what's been sort of the expected, let's say, impact of the other investments, that were sort of in the other avenue. And we feel really proud that our investments, they have proven not only to have strong financial performance, but actually they've been proving to be very resilient to the crisis. And the portfolio has been able to reach, in our case, over 10 million people, out of which 27% is population living under the poverty line. 55% is population living below the vulnerable line in Latin America. And that's just been very powerful. Without that, conviction, without having executed sort of in that way, we had not been able to raise capital for our second fund. We raised capital our second fund is 2023, where in Latin America was going through probably one of the biggest crises in terms of fundraising capital for early stage investing. But Alive's, I believe, conviction and thesis of investing in businesses that have impact at their core and that have been able sort of to navigate the market turmoil relatively well, provided, I think, the opportunity and the capacity to investors sort of continue trusting that in the region, in the markets in which we operate, despite the challenges, this is an attractive opportunity. So going back is, sticking sort of to our thesis, really sort of proved the opportunity, and raising the second fund was possible thanks to that.
Thank you. I do. Okay, sounds good. I'm happy to. Okay, so we're gonna do one more question, and then we'll go to questions from the audience. So we're obviously in a moment right now, and it is deeply challenging, unsettling on so many levels, and it's important to acknowledge that moment. And wanted to hear, I think nobody is better equipped to be able to answer how Catalytic Capital should be responding in this moment than folks like the three of you who are deploying that capital. So what should we be thinking about in the current context? How should investors be showing up differently, and what's more for Catalytic Capital, especially for those allocators that are looking at LP commitments?
Yeah, I'll kick us off on this one. We are thankfully sitting on a lot of dry powder in our Fund 3. So we raised that $112 million fund right before Silicon Valley Bank crashed, thankfully, which we know followed the market, and we're in this position now. So we are sitting on cash, and we've been slow to deploy. We've actually had LPs tell us, move the money, but a lot of folks have been sitting on cash, impact or not. And now I think there's conversation. We're happy, and our LPs are happy that we've sat on this cash as the pendulums swing. For us at Impact America Fund, our impact is in the name for a reason, so that I wouldn't get tempted by intros to non-impact companies. I co-invested very early on with an Andreessen Horowitz, so we have access to the traditional venture technology investors, but impact is in our name, Impact America Fund. And for Fund 2, we've invested in highly impactful companies, Isuzu, that's billion-dollar valuation, raised over 100 million, solo funds that's done 100 billion of transactions. And if you look these names up, these companies are also very much committed to the mission of serving low and moderate income people. So we've done our work. We've stayed committed to our thesis in Fund 2, and now in Fund 3, we are, I wouldn't say raising the bar, but we want our bar to meet the moment and to make sure that we're investing in companies per the needs of low and moderate income Americans. So this is a call to action for us in a very different way than I thought about when I started this fund. And we will invest in the best and brightest entrepreneurs. Santiago's point, we were often lumped into the category of, which I support, investing in diverse women, minority-owned founders. Many of our founders are, but our thesis is to invest in solutions that scale the most impact for low and moderate income Americans, and so we will be investing in the best of class to continue to do that work. But for us, we're rethinking what impact means in this moment.
So I will speak to my world of climate investing, although I suspect that the takeaways may be broader from there. On the topic of redefining what impact means right now, I guess specifically in climate, this is going to be a little bit of a downer comment, but we are way behind on where we need to be in climate. The reality on an emissions basis, and the reality of that is that things are going to get very painful for a lot of people, especially those who are most vulnerable. And what that has meant for us in deploying dollars into climate is that we cannot solely focus on emissions anymore. We need to be investing in adaptation and resilient solutions. And we are not the first ones to say that, but we are an example of a climate fund that is waking up to that fact that it would be irresponsible, in our opinion, to be solely focused on climate change mitigation at this point. So that's kind of an expansion of impact based on where we are. And then secondly, to this particular moment, I have to say it is really disheartening to see a lot of peer climate investors kind of flee the field or rename, or we're an AI fund now, or whatever it is. Because the last time I checked, the climate challenge is a decades-long thing that we're all doing together, and not a 2 to 4 year, election cycle driven matter. And so, we just really need to stand together and say we are in this for the long haul. That's just what this is, and there will be another cycle that comes around, and this is how things move in 2 to 4 year cycles. We will be okay, but we have to keep our eye on the goal here, which is a long-term goal. So that is my biggest wish for climate tech investors and impact investors, is that as much as possible we maintain that long-term goal mindset as we band together.
Anything to add, Santiago?
I have a real concern that we've gone through. It's been almost 3 years of this downturn, market downturn, and illiquidity in, I think globally, but the volatility in Latin America is just vast. So if you see changes here, in Latam it's like 10x, right? And the ecosystem is just also extremely vulnerable. And so what we are seeing right now is it's a dearth of financing and access to capital, and many companies sort of when they had sort of to buckle up and sort of to navigate these challenges, they did, but it's just been too long of that kind of ecosystem. And also, I'm afraid that I'm starting to see also, important players pulling back because of the sort of the crisis. And so to your point, John, that what Catalytic Capital needs sort of to do, or what can we do as an ecosystem, I think it's just we need to keep going. We need to continue deploying capital. We need to continue doing the work. We need to continue showing the possibilities. Even though it's tough, to get off the ground also, because no one will be successful by its own. This is an ecosystem play. And so for impact investments and sort of to really transcend and see that there is really a path also sort of to mainstream, I truly believe that we need sort of to continue believing, continue investing, to sort of reignite the possibilities for the segment.
Could not agree more about the need to continue moving forward. So this is a really interesting question from the audience, and I'll preface it by saying that Catalytic Capital at its core is trying to do a few things. Johanna mentioned the additionality point. Each of these three have mobilized significant amounts of capital. And I'll note something that Santiago did not mention, but I think is really core to their thesis, is mobilizing local capital in their region. And that really leads to this idea, this last idea of some form of systemic impact, trying to achieve a systemic form of impact. And I would argue each of these theses that are presented here are seeking to achieve that. And one of the ways to do that is a demonstration effect that isn't necessarily your fund or your effort achieving the direct impact, but others pick up the idea. And so the question from the audience was, are any of you aware of others who've taken the pioneering models that you've pursued and are seeking to pursue that as well? And so I'll just ask the question. And I know that's really core, Johanna, to what you and Sarah Carney at Prime Coalition have considered. But question to the full panel.
Sure. I love this question. We are aware of other efforts that are experimenting with this model. Chief among them would be the Climate Impact Fund out of Virtue Labs, so some folks from there here today. And, was just catching up earlier today with that team and excited to hear about the progress there. Clean Energy Trust, formerly Clean Energy Trust out of Chicago, Evergreen Innovations is the revised name, experimenting with a similar model. And so it's actually been a central premise at Prime Coalition, the nonprofit, to just share out everything that we can about what we're learning. And so you want the legal docs? Here are the legal docs. Like, here's the structure. Tell us how you innovate on it. Keep us informed. Likewise, we'll be, expanding and working with other impact partners in the future, including Impact Charitable. Cindy Willard is here. And, kind of cross-learning between organizations about how do we assess companies for additionality? How do we assess companies for impact? We're expanding our pool of impact partners as we expand to include adaptation and resilience, because we're going to need to innovate in, as we underwrite investments to different impact targets, as I mentioned before, moving beyond just climate change mitigation. So it is our desire that there are many more funds like ours. We think we would have a much healthier ecosystem, many more shots on goal. That is what we need. And it's our desire that continues to flourish outside of climate as well. There's a lot that can be kind of learned across sectors. And not just within one, as we're seeing on this panel.
Great, thank you, Johanna. Anyone else on that one?
I just add, I love their model. I started before you all, but I may copy you all going forward. And I had a chance to talk to your partner, Amy, about this as well. We are, one thing that we're learning is like venture capital is not the end all be all. It plays a very important early stage role. And one thing that we have learned through our Fund 2 investments that I think we will start to institutionalize and formalize is just like looking at the capital stack. Like, what makes sense? To your point, you guys have it embedded into your model, but are there grant monies for this aspect of the work? There are venture capital debt funds. And we've been thankful enough that a couple of them have invested in our impact-oriented companies, and so they're getting up to speed on what this means. So there are a lot of capital players, whether they wear impact on their sleeve or not, that see value and inherent impact and value in the types of companies that we invest in, because these are big market opportunities, that are willing to play ball with us, which then gives us more flexibility on the capital stack, and most important, preserving equity for the founders so that when they do exit, they actually make money. So that's another conversation.
You're here on that. That's incredibly important. This is another question from the audience, and this is sort of an ongoing question in the field, but how do we get to greater scale in order to achieve the type of impact that we're seeking?
Happy to take that, but not with an answer, because I actually, John, I share is that the concern is how we get to the next level, and the importance sort of to unlock really greater pools of capital that are aligned sort of with the vision and the mission that we're trying to achieve. because one of my biggest concerns is that sort of what we, what we define as impact investment, in, I don't know, a few years' time sees the next, kind of CSR strategy or the next whatever it was 10 years ago, and it really doesn't mainstream. And so not an answer to your question, but more a call out sort of to everyone here as a community is what we need to do to really mainstream. What's needed sort of to unlock different pools of capital. And probably this is the people that can play the catalytic role to unlock the capital that is not sitting here. We've tried sort of to bring local capital, and there are, as mentioned, a third of our investors are local, but we're kind of stuck in a point in which it's difficult sort of to see those that did not believe at the beginning and those that have not kind of stepped forward. And it really, to make a dent and to make a change, and also to take advantage of the great opportunity that there is, we need sort of to really unlock much more capital and bring others sort of to the table, so that they can go along. So I think this is the catalytic capital that can play the role, can play that potential, but it needs sort of to be articulated.
I'm kind of wondering if we should brag more, because I think that this crowd, we end up being, very humble and demure, and we're in it for the mission, so we don't brag. But if we took a little bit of the finance bro energy and pointed to the incredible successes that are happening, I think it would be so powerful. And I was thinking about your opening comments about how it's not always clear that catalytic capital powered what looks to be an overnight success, to the point where I've been in a fundraising meeting explaining additionality and how we invest before anyone else will, and someone pointed to a well-known company in our portfolio and they said, but not that one, right? You made an exception for that one? I said, no, we invested in them 6 years ago before we had heard of them. So we just need to really shine more light on those successes, which is part of what C3 is doing and so powerful, and I think we need more of that.
Thank you for that comment. And I want to pick up on what you just said and what Santiago said. And that just the call to action, you all are the people that get us to scale. And that's what it's going to take all of us, this community, to do that. I've been thinking a lot about hope in this moment, and just how important it is, how powerful it is. And this work that we all do together, this shared work, hope sits at the foundation of it. It's a hope for a better world. We all see the problems, but we also know that there is a better way, there's a better path forward, and we're all working for that. And so I wanted to see maybe if we could close with what makes the three of you hopeful in this moment, whether it's about your work, whether it's about something else, but what are you thinking about when it comes to hope in this moment?
I don't have the hope answer, but I have an I'm glad answer.
That's a great answer.
I am really, to your point about, brag on ourselves a little bit. MacArthur Foundation, and I'm assuming most of you know the name, you're in this room, very large foundation. And I am glad that you all exist and the team that works together at MacArthur, not just for me as a partner, which I have a great relationship, thankful to have a great relationship with MacArthur beyond the capital. We're in real community together. But I am glad that I have a partner that's showing up above and beyond for the ecosystem right now. And I need to call that out because MacArthur's name pops up in these various conversations we're having. And there are others, but MacArthur names at the top of the list of standing strong and standing tall and being committed to this work as we go through this moment. So thank you. I'm very glad to be in partnership with you all.
Very well said, Hisha. I completely co-sign that. Something else that's giving me hope, I delivered some downer comments before on climate, and I stand by those. And I often do that on panels. It's not my intent, but I do have some hope. I had the opportunity, or I do have the opportunity to interview a climate policy author for our my fund's AGM tomorrow. So I've been doing a prep call with her, and this is a woman who was part of designing the Inflation Reduction Act, and which is of course being dismantled piece by piece. And we're going to talk about that and what's that like. And you would not believe her resolve. She's like, I'm not really focused on that. I'm focused on 2029. What are we going to pass in 2029? And that was so inspiring to me. So that's my question to everyone, right? What are we doing in 2029? What do you need to be doing now to lay the foundation for whatever big beautiful thing you are going to build, as the next chapter unfolds? And so that has been a really important reframing for me in terms of where to put my energy, and I hope others might find it useful as well.
I always find hope is when I meet with the entrepreneurs and the founders of the portfolio companies in which we invest, or all those founders sort of pitching new ideas. And I truly and strongly believe we are living a time in which change is possible. I truly believe that there is an opportunity, an incredible opportunity ahead of us with the innovation, the technology, the possibility sort of to bridge so many gaps that in the past it was probably impossible sort of to get to some segments of the population. Right now, it is possible. And so I think if we share that conviction and we continue pushing again, in Spanish I have, when people ask sort of about, well, how things are going, someone a few days ago told me an answer that I think is really good, which is, it's remando en arequipe, which is like paddling in mud, let's say, It's hard, but if you truly believe that it's possible, then that's the way forward, and we need to keep paddling.
I love that. I'm going to close. I'm going to remember the paddling in mud. It does feel like that. I want to say that the thing that has given me hope is observing everyday acts of courage in this moment. And we are seeing that in our communities, in Chicago, around the country, individuals who are acting with extraordinary courage. We're seeing that in our shared community here. We all know people who are in the eye of the storm in different ways and who are standing firm and with resolve, and that's really powerful. And that gives me a lot of hope for the future. It gives me a lot of hope in this moment, and I know that great things are going to come because of those individual acts of personal courage.